Welcome to Drill Down Earnings. We have second quarter results out from Netflix. I'm Corey Johnson, the Chief Market Strategist for the Futurum Group. When we look at Netflix, obviously we know the business. It's a consumer-facing business. It's facing all of us. And from the looks of these numbers, we're probably all subscribers. These are really solid numbers. A slight beat compared to Wall Street's expectations. But let's dig a little bit deeper and see how the business did. $9.6 billion in revenues in the quarter, up 17% on a year-over-year basis. The secret to success here is no more mooching. The end of password sharing, or at least Netflix attempts to crack down on that, really led to an acceleration of revenue growth. So not just revenue growth, but an acceleration of revenue growth. Again, 17% year-over-year growth in revenues for this company. And so not only are revenues increasing, but the pace at which they're growing is increasing. And it's happening all over the world, in US and Canada, EMEA, Latin America, Asia Pacific. All of those regions adding millions of new subscribers. And maybe the only negative note was that the average revenue per US subscriber did not climb as it had been for many of the last, call it 8 or 10 quarters. $17.17 on average revenues per customers, per member in the US. But still, very strong number, much better than where they were in the past. And new members continuing to increase here. I think that, maybe the most important number is that membership growth number of 3% of average paying numbers on a sequential basis. So again, that number is ticking up, all the numbers are ticking up, and the pace at which they're increasing numbers are picking up. One of the interesting things they had in the conference call was a discussion about how people use their time and how they really feel like the more people spend time on the platform, that's the best indication that they're doing a good job there. The Netflix conference call is one of my favorites because not just because we get to see the individuals involved, they do a video call unlike most US companies, but they also really talk about the product and how much love they have for the product and getting it right. When they talked about the streaming business, they talked about how 40% of US time on TV right now is streaming, and about half of that is Netflix and YouTube. They talked a little bit on the conference call about the comparison to YouTube. And one of the things they also talked about was AI. YouTube, of course, uses lots of AI to put things on top of their feed. Hopefully this broadcast right here is one of your favorites and you subscribe to the Futurum Group or 6.5 Media. But I think what was really interesting here was the conversation about how those businesses are different in their use of AI, and particularly CEO Ted Sarandos talking about how they want to use AI not just to make their business work better, but to help creators create.
It begs the question about, the impact on creative with AI going forward, which is hard to predict, obviously. But I would say this: I think that AI is going to generate a great set of creator tools, a great way for creators to tell better stories. And one thing that's sure, if you look back over 100 years of entertainment, you can see how great technology and great entertainment work hand in hand to build great big businesses. You could look no further than animation. When animation didn't get cheaper, it got better in the move from hand-drawn to CG animation. And more people work in animation today than ever in history. So I'm pretty sure that there's a better business and a bigger business in making content 10% better than it is making it 50% cheaper.
So interesting comments from Sarandos. I would be remiss if we didn't talk about what happened to the stock. So initially the stock sold way off in after hours, well, about 5-10%, but then it rallied right back in the conference call when we could see that numbers looked really good here. Even if the guidance wasn't terribly exciting, they stuck with their full year guidance, even though next quarter's guidance is a little bit below Wall Street numbers. Whatever. I'm going to give you one number that does mean a whole lot, and we're going to talk about that number, the Drill Down Earnings Bite, right after this.
The Drill Down is brought to you by Futurum Group, where analysts, researchers, advisors, content creators, and marketing experts help business leaders anticipate and understand shifts in their industries and build strategies to leverage disruptive innovation. With deep analysis, Futurum Group's extensive industry experience delivers reliable research and data, thought leadership, and actionable advice to help you with your strategy and go-to-market efforts. Futurum Group.
All right, Netflix Q2 earnings. I want to give you the takeaway, the one number that means a whole lot, the thing you want to remember about this quarter. Was it the $9.6 billion in revenues? No, it was the growth rate, the year-over-year growth rate in those revenues. That's the most important thing, I think, here. 17%, that's the bite, the number you want to remember, the one number that means a whole lot. 17% revenue growth for this company, accelerating pace of revenue growth since they've gotten rid of the mooching of passwords. More subscribers paying more means accelerating revenue growth. It's been very good for Netflix. All right, thanks for listening to Drill Down Earnings. I'm Corey Johnson. Check us out at Corey TV and on X, TikTok, and Instagram at Drill Down Pod, and of course at 6.5 Media on YouTube. Drill Down Earnings, part of 6.5 Media Group.